And so as we've grown and built that community, the reason that people come back and like change from Nightshade Noodle Bar investor into a Mainvestor is because they see it work, and because there's other businesses that then come on that are in the community, and like they come back to the platform, they see that creates a cycle. But for the businesses themselves, in terms of that crowd, it is a hybrid. And like a big part of our job, beyond just like working with the businesses around the regulatory compliance of launching an investment campaign, is about equipping them, empowering them with all the tools and tactics to go out to their community and raise capital, and clearly explain to them, like, this is what we're doing, this is our pitch, this is our mission, this is how we're going to do it, this is why we believe that with your support and help, like, not just us, but you are going to be able to share in this success.
This episode is brought to you by Restaurant Systems Pro.
With excitement, allow me to introduce to you today's guest, Nick Mathews, CEO of Mainvest. My man, Nick, are you feeling unstoppable today?
Absolutely.
Dude, I'm psyched to be here. So you guys reached out, and I don't always say yes to folks that reach out to me, because I really try to let Restaurant Stoppable be organic. I really try to find my leads from people who have used that service and can testify on it. But you guys are such a young company. And it's been, how long have you been around now?
Been around for like 3.5, 4 years. So but like, again, throughout the pandemic,
and you're helping people find money, right? So Absolutely. What are the odds that at this point that, people have taken your money and have been around for 5 years and are super successful? But I did my research. I think you guys had one of my past guests on the show. Does Rachel Miller sound familiar?
Oh, of course.
Nightshade. She is one of your past past clients or current.
I guess she used the platform, but like all of the businesses that we work with, we work with for the long term. So she's definitely a current client.
And you have one of my members of Restaurant Unstoppable Network, Adam, from the Fox Den.
Oh yeah.
Yeah. So I'm like, okay, there's some signs here. I'm finding clues. And honestly, man, if I gotta be honest, like, this is important work that you're doing. Like, finding capital, raising capital is one of the hardest things for starting a restaurateur. So I figured there's something here. So you got my interest. I'm here. I cannot wait to dive into Mainvest, how you guys started, what the story behind the company is, and what my listeners need to know. But let's get that motivational, inspirational, ball rolling with a success quote or mantra. What do you got for us?
Be an owner, not a renter.
Be an owner, not a renter. Why did you choose that?
It ties back into like my background and a lot of kind of how we think about the work we do at Mainvest, and also like the work at like any entrepreneur, like in that early stage of starting a business, the kind of importance of working and really taking ownership of what you're doing. And as you're growing that company, bringing on people and a team that, aren't just kind of there for the hour by hour, but really do care about the mission, and we are very mission centric and aligned about what you do and feel a sense of ownership for the work you're doing.
I think that's just a good lesson in general, to like own assets and to not pay rent. Like, generally speaking, like,
it scales really well.
Yeah, whether you're a first-time homeowner or you're a first-time business owner, you need an asset. You need something that you're putting your own money into in case the business doesn't work out. You need something else to hang on to. So I think, generally speaking, what are you thinking?
In terms of,
I don't know. Those just looked like you had thoughts, and I didn't want to.
Oh no, I'm reacting to what you're saying. Again, we're pretty excited to be here. I think that like when we had reached out, it was partly because we saw that you were deeply ingrained in the restaurant industry, and and listening to some of the kind of work you do, like it felt very much like the conversations we have with these restaurateurs and small business owners all the time around those challenges, and having you kind of be a Sherpa in like, kind of taking that out and guiding it through.
Yeah, man. Well, hopefully we can get the word out here. That's what we're here to do today. But where does it make sense to start sharing your story? I mean, you're a relatively young guy, right? CEO of this company, right?
Yeah, it depends.
What were you doing before this?
So prior, I was pretty much career Uber. So I was an early employee at Uber. I joined back in 2011 when it was like a 30-person company to launch Uber in Boston, which was like, I think, our fourth market at the time, and grew with the firm over the next 6.5, 7 years.
What was your title with Uber?
Started as community manager. Then I was basically senior marketing manager. Then went down to DC for like 2016 to 2018, led a US and Canada BD team, and then went into strategy and planning. So I wore a lot of hats over the time there.
And how long were you with Uber? When did you wrap
up?
About
6.5 years. I left in spring of 2018.
Okay, so not too long before starting Mainvest.
Right. No,
so,
I left pretty much with the purpose of starting Mainvest.
So when did Mainvest I mean, what was going on internally with you where you're like, this needs to exist? There's an opportunity here.
I mean, it does tie a little bit, and I guess a lot of it, into the Uber story. The first kind of ideation, like really thinking about it, was way back in like 2013. When I was leading kind of this exploration for New England around, can Uber work outside of metropolitan areas, and like what does the supply demand liquidity look like? Does Uber work in like a Worcester, Massachusetts, or Providence, Rhode Island, as opposed to like a greater Boston area where you have population and supply density at much higher, and kind of exploring that, going to like all of the, again, Massachusetts based, all these like mill cities, and looking at kind of the challenges around economic development in those cities. Right. I was a poli-sci major originally, so I couldn't like do that effectively without going down a bunch of economic development rabbit holes. And kind of in doing so, that was really the first time that I got like edified in, for one, the role that small businesses play in local economic development. And it seems to be a very, very important role. And then looking at that time around, well, this massive gap and challenge around access to capital in the small business space. And you were looking at like institutional lending, traditional lending from like local banks and national banking institutions in the SMB space. It had dropped around 69% pretty much overnight after the 2008 financial collapse, right? So you had like the number one asset that was being used to collateralize on this lending being, home equity, and the highly levered position that institutional finance was in kind of evaluating these. And when that asset became volatile, basically SMB lending really dried up. And beyond that, it kind of led to this, institutional underwriting and kind of the way that they evaluate it is, all right, you need this capital to like start or expand your business. If you're an existing business with 2 years of revenue history, like we have kind of a model to underwrite that, but we're still going to need to collateralize it to de-risk ourselves. For new businesses, like they didn't really know how to lend because of like it being such a risky endeavor, and so they didn't. And kind of thinking through, well, you have these institutions that are basically the capital gap access for businesses required to grow local economic environments and organizations, and their underwriting was missing kind of a key component, which is the actual underwriting of the market. And it kind of led to this idea of why can't communities directly invest in the businesses, under the thesis that like when you have the community voting with their wallets, investing in these businesses, the community saying that like, I want this business here, I'm going to support this business. It provides that market validation on the front end, alongside that capital access. And then on the back end, the business is not just getting capital that they need to scale, grow, and build it out, but they also have a bunch of people in the community that are aligned in incentive, that are invested with skin in the game, that want that business to succeed.
Right. Right. What's going through my mind listening to you talk and thinking about the people that live in these communities who want to put their money someplace that matters to them, there wasn't the framework that I'm aware for. Like if you were somebody, an individual doing well and you had excess income and you wanted to invest it, you're likely going to go to the stocks. Right. Like that's because there's the framing that exists. There's the path of least resistance to put your money someplace and have a fairly good bet. Exactly. Right. But would people put their money in other places if there was the framing that exists to make it easy?
Well, that's
the question I had.
That was a well-leading question into like kind of thinking about that back in 2013. I was like, why doesn't this exist? Like, why isn't this happening? And then in kind of digging in, further edifying myself on, federal securities regulations, it was like, wow, there's a really stringent kind of framework in place that's been around since the Securities Act in 1934 that limits the ability for businesses to go out and solicit like for investment. Yeah. And rightly so in many cases in terms of like investor protections on one end, but also like it limited the type of person that could go and invest in these businesses. If you wanted to invest in a business at that point in time, for one, like you had to be like directly connected with the business.
You had to have somebody pitch you,
and you had to have $1 million in net assets, excluding your primary residence, or $250,000, like the accredited investor designation that was put in place back in 1934. And basically limits to like 6 or 7%, probably less at this point if we're looking at the growing wealth gap of the U.S. population being able to even participate in that. And that's kind of where Mainvest really like became a potential thing. Was you fast forward back to up to 2016, and it was right at the point where the Jobs Act, which was a bipartisan economic stimulus bill, was on the floor of the House and the Senate. And one component of that was something called regulation crowdfunding. And regulation crowdfunding was basically looking at that massive wealth gap, looking at the challenges, more around the eye of looking at it in terms of like the Ubers and the Airbnbs that were going and raising these crazy rounds of private capital and being able to continue to do that and do like a DCF round.
Yeah,
So
just
that by the time they go public,
Yeah.
the majority of that potential upside has been limited to only that small subset of the population that has access to it. And so they wanted to create a framework to allow for investor protections to be in place for retail investors to be able to start participating in that. And I looked at that and I was like, well, that's, really, really cool. That's interesting. But these early stage tech companies, they have access to a flourishing ecosystem, as we just said, of venture capital, private equity. Small businesses don't. And in kind of looking at those regs, it kind of opened up like, holy crap, like, can we retrofit these regulations to enable a community capital marketplace for small businesses? Is this the framework that suddenly unlocks that?
And specifically, what were the regulations that you were looking to rejigger?
So we didn't rejigger. Congress rejiggered back in 2016. But like the two core things that it changed was it created a regulatory framework to allow for private companies to go out and publicly solicit for investment if done through a regulated entity.
So
such
you're
as
the
Mainvest.
private company, or is it the restaurant that's
the restaurants are the private company, right? So this is all of the things that made Mainvest possible, and like why you didn't see like a community investment marketplace prior to that.
Right.
There were regulations in place that kind of prevented that from happening, and it, like the reason that those regulations changed, this wasn't even kind of the impetus for it, but when they changed, it was more of looking at that and saying, this is what allows us to create a way of like protecting investors, allowing them to make educated decisions, but allowing communities to be able to directly, not like GoFundMe donate, but directly invest and share in the success of businesses in their community and create this kind of closed loop capital circuit of localized economic development.
So it's not like, it is crowdfunding in the sense that you're providing access to a crowd of people.
Right.
But it's not crowdfunding in the sense that this isn't like a transaction where you're making a donation. You're literally investing in that organization.
Exactly. And I think that's one of the core, challenges for us. It was when we first started was because it's called regulation crowdfunding, it comes with all of the stigma of like donation-based crowdfunding. And when you're a for-profit small business, like looking to grow and generate revenue, like putting your hand out for a donation doesn't necessarily make sense. Like,
I kind of hate the idea of nonprofits. I'm not going to lie.
Like you need to be able to
hear me out. Are you a nonprofit?
No, we're not a nonprofit.
I was going to say, well, hear me out. It's because why do you have to be labeled a nonprofit and get that go through like the legal structuring of a nonprofit to be a for good business? You know what I'm saying? Why not just call it conscious capitalism? Why can't it just be good to do good business and have that be a staple of doing business?
I mean, I think that that's definitely one of the challenges around how people are currently like thinking about, like you talk about like corporations, and this idea of like you can't do both is ridiculous to me. And that's where in like the idea of starting a mission-focused company that's still a company and that's designed to drive economic growth for all the people working here as well as for the businesses that we support, being able to be viable in the sense of having long-term ability to profit and have its like sustainable business model is in a way like what allows something like that to exist.
Yes. The mission statement here at Restaurant Unstoppable is to inspire, empower, and transform the industry. And the reason we want to transform the industry is to transform the world. I should probably start changing my mission statement if I'm listening to Simon Sinek by saying we're here to transform the world through inspiring and empowering the restaurant industry. And that's one of the big reasons why I wanted to talk to you. And I think one of the reasons and how we're going to transform the world is by changing values and not making business about winning or losing, but about doing good. And, what is your social impact? And how do we label social status by measuring the level of social impact people have,
The idea of like, how do you define value, I think is really the core of it. And when you talk about like whatever stage of capitalism we're in versus the core construct of is capitalism viable as like a market driver, I think there's more so than I think I've ever experienced in my life, like a lot of really fervent debate in our nation around some of those challenges. And it really does come down to the definition of value in my mind, and value needs to be compensated. But like when we think about traditional like value in terms of shareholder value, that doesn't that ROI value as like a single line input, same way like thinking about like GDP is the single way we're measuring like economic success and growth of our country. It doesn't align with like happiness index, mortality rates for birth. Like that's to like take this crazily out of just the context of let's fund some small businesses and have them succeed. But in like weighing value, I think in order for us to be able to successfully grow and develop as a nation and kind of maintain like the amazing like history and parts of it that like have like led America to, kind of really change away and like be a bastion of democracy, a bastion of equality for like many years in the attempts to do that. You have to every once in a while look at like how are we actually measuring this stuff, and value needs to be looked at as like when a small business is able to provide food to a community, like a local like natural grocery store is like filling in like a food bank area. That value is not like, I guess like filling in a food desert was what I was trying to say. There's value there, beyond the ones and zeros of their balance sheet and income statement, because there's direct value to the community in terms of access. It allows like a greater level of growth in that community. It creates a level of equality. And those things are really core to what we're doing in our mission. And we do believe that you can do that, and that value can grow and also provide profitability to the entrepreneur and small business owner that's doing this, and allow them to grow and live a very successful life and share that with the community.
Got it. So dialing back, bringing it to center line, 2015, these new regulations came out. When did you start thinking to yourself, there's a hole, there's an opportunity to make things better? When did you start putting the ball into motion?
I think almost immediately upon those regs coming out, and when I saw them, like started like looking at like
what were you doing with Uber at this point? Were you still community management, or had you kind of?
No, so I was down in DC, and I wish I could say that like I was like sitting at a bar with some like securities lawyers, and I overheard
everything great starts in a bar.
But
like America.
I think me being in DC wasn't actually a direct there wasn't like some direct magical tie to those regulations coming out at the time when I was there. But I was leading our Uber business development team, and we were focused on like event operations and partnerships. It was very like exciting stuff. But like seeing those regulations, it just like started to like eat and spin in the back of my mind of like, this kind of concept around community capital and, solving capital access gaps for small businesses, driving local economic development. Is this the thing? Like, does this suddenly is this the unlock? Does it allow you to do something like that? And, over the next couple of years, just got like more and more into it until around 2018 when I was like ready to go, and I was like, what, I'm going to do this. We got to do this, and left Uber to start building this thing.
So in 2018, what was the vision of this thing that you have echoing in your head?
Honestly, I'm proud to say this, pretty close to where we're at right now. It was funny, like we just went through an exercise with the team where we dug back into this 2018 vision.
That's why we wrote them down, right? To keep us honest later on.
To keep us honest. And it was really about like, can we build out a framework that aligns incentives with communities and the small businesses there to be able to unlock capital and drive local capital.
Local capital,
local businesses, local returns from that capital in staying in the community, and what does that snowball into in terms of accelerating local economic development? Now, I think the one thing that wasn't in that vision deck was a pandemic.
Right.
But
nobody had that in their
I'd be very impressed if someone did. I did see I think it was like Wimbledon back in like 2013 had the foresight to actually get pandemic insurance.
Oh, really?
And they were paying like $2 million a year for it over the next 8 years, and it like paid out like 114 million quid. And I was like, wow, that was their risk management there. Like, that was impressive. Awesome. But no, most people know.
Oh man, so I think now's a good time to take a break to thank our sponsors, and we'll be right back to talk about what happened thereafter once the vision was shared. How did you make this into reality?
We have to interrupt today's video to let you know that right now Restaurant Systems Pro is offering a no strings attached 60-day trial that will help you improve your systems, increase your profit, and find better work-life balance. All you have to do is click the link below.
We're back. So let's talk about the past 5 years, really, 2018 to current. What has the evolution? What were your challenges? Like, how did you overcome those challenges?
For sure. I think the biggest like first challenge was the education piece around something like this is super unique.
Educating who?
Educating the business owners. And when you're a small business owner and you're back in 2018, you're thinking about like, how am I going to fund this business? There was there's a reason they call it institutional capital. It was a pretty finite amount of options in terms of how to do that. And alongside when we started talking to businesses, Rachel being, you mentioned that Rachel was Rachel Miller from Nightshade.
Yep.
And she also did a raise for Sin City Superette, which is the convenience. There's just both of her businesses. She worked with us to help.
And how awesome is it with a local Salem? I think they're Salem.
Lynn.
Right? Lynn, just north, right?
South.
So
It's all right.
Around here, same, within 30 miles. But that's awesome. So what was it specifically? So the challenge was communicating what you were to business owners, but where was the disconnect? Why were they having trouble understanding?
So I think that there's this sense of the handcuffs around crowdfunding, right? When you're telling them about hey, you can run an investment campaign for this, and they're like, well, crowdfunding, what's that doesn't make sense for us. We don't want to be going out and asking for a handout and be like, no, this is actually just a way to better align, your principles.
They hear crowdsourcing, they automatically assume crowdfunding.
So there was a bit of a handcuff there in terms of education, and then in terms of the regulatory framework that unlocked it. When we first started, it's that whole well, why haven't I heard of this, right?
Yeah.
With any brand new thing, well, why haven't I heard of this? Why doesn't this exist? And if you're in your first conversation with a brewery and we have no businesses that have ever launched because we haven't launched the product yet, and we're talking to businesses about hey, be our first cohort, we're going to go and try this, we think it's going to be fantastic. There was a lot to kind of explain, to dive into, well, let's talk about the regulations if you're interested. You have a 680 page, commented Congress file that digs into all of these. It was a lot, I think, in, what do you actually boil it down to? Because we wanted to make sure that people actually understood it. And that kind of our learning of what is actually important to understand, and making sure that a business goes and launches on the platform is fully equipped for this entire journey of going out, raising capital from their community. When it works, it's amazing. But that feeling of self-doubt was another big challenge, I think, on the business side is well, do people even really want to invest in me? What if people don't want to invest in me?
Right. You go through all these motions and then it's crickets.
Right.
And what about finding the actual crowd? Because I'm assuming you need an audience of people on Mainvest, right? To see how do you get access to those people?
So as we've continued to grow, people that are investor base, Mainvest does have an investor base, and that investor base is primarily built of people that have invested in previous businesses on the platform. So in a way, for any marketplace, there's what you call a cold start challenge in that balance of supply and demand liquidity. The cold start challenge early on was we didn't have anyone on either side of the marketplace. And if you think about a chicken or the egg, you can't have a bunch of investors without anything to invest in. It starts with the businesses. And so as we've grown and built that community, the reason that people come back and change from Nightshade noodle bar investor into a Mainvestor is because they see it work. And because, there's other businesses that then come on that are in the community and they come back to the platform, they see that creates a cycle. But for the businesses themselves, in terms of that crowd, it is a hybrid. And a big part of our job beyond just working with the businesses around the regulatory compliance of launching an investment campaign is about equipping them, empowering them with all the tools and tactics to go out to their community and raise capital and clearly explain to them this is what we're doing, this is our pitch, this is our mission, this is how we think we're going to do it, this is why we believe that with your support and help, not just us but you are going to be able to share in this success.
Yeah, I want to dive into what that process looks like. If I'm listening to this and I'm interested in checking out Mainvest, maybe I can find some investors in my community. Or is it limited to your community, or could you?
So it's not limited, but it definitely 100% of the time starts with your community.
Yeah, 80% of your revenue comes from the 20% that's probably most close.
Ours ends up being 60-40.
Okay.
I think blended across.
So 60%
from the community, 40% from more continued investment.
Got it.
But we do, as part of our underwriting, that underwriting is a level of social and community underwriting. So when we launch a business on the platform, we don't unlock and start sharing that with people in the Mainvest reinvestment network until that business secures a certain amount of capital from people in their network and people in their neighborhood. And in a way, that's what we call
momentum.
It's a community underwriting process, right? If you have people in your community that believe in you to a certain threshold, that they're voting with their wallets, and that first to like put money in and invest,
Yeah.
that then unlocks really the entirety of the model, where that allows for like other people to see like, oh, there are people that believe in this business. Like that, to me, de-risks my potential investment in a business like that.
Yeah, this comes up a lot just on the conversation of raising funds generally when you're going out to raise capital. Like if you can say you're looking to raise $1 million,
right?
If you can find a bank to write your loan for 250, then that gets a lot of other investors off the couch. So like
Absolutely.
it's seeing that initial investment that gets other people. Well, somebody did their homework to put 250,000 in. I'm gonna roll my dice now.
Absolutely, and I think we do that on a macro or a micro level. And in a way, it's kind of unique. And we look at businesses that are coming to like a new business that's starting up, and they have a total capital need of $500,000. Like they go to a bank, and bank's like, we just can't underwrite this entire thing.
That's
right?
another lesson.
And what's been interesting is, again, as we kind of circling back to the start of the conversation around a traditional capital and like the traditional lending market, and so the challenges they face in not having market underwriting as part of their underwriting model. When a business is able to go out and get that skin in the game from the community, that can unlock the ability to get bank capital in a way that they weren't able to before. And that's one of the major use cases for like larger capital raises on Mainvest, like a business that needs $500,000. And a bank is like, maybe I could do like 300, but if you had $200,000 of bleeding skin in the game, being able to do that raise then unlocks the rest of the capital for that startup cost.
Nice. So it's not people who are going through Mainvest aren't entirely using just Mainvest. They're going to show that there's a market. What do you call it? Market underwriting that shows proof of concept, or at least a desire for this product that you're looking to create, and then the banks get in the pool after.
Yeah, that happens with maybe like 20-30% of the business on the platform.
Interesting. So before we really start to unpackage what Mainvest is today, you said that the vision for Mainvest then isn't exactly what it is today. So what changed? What's different about your vision then that is accurate today?
So I think like a lot of the challenges of the pandemic had like changed. We just had to operate in a very different way. The initial vision was we're going to be building out basically on a market-to-market basis these hyper-local marketplaces and be building supply, like New England, Massachusetts being our first market. When the pandemic hit, everything went digital. And, beyond the fact that we had launched a brick-and-mortar investment platform into a pandemic where the number one affected asset class was brick-and-mortar business-to-consumer businesses, there were two kind of things that we had to really like navigate through there. One was, when you lose the actual on-the-ground aspect, there are an immense amount of challenges. Like when businesses can't be going out and like, actually talking to people in their community about like what they're doing, it becomes more challenging for them to raise capital. Right. When there's a fair enough stigma around, there's a government shutdown right now. Like you don't even know when you're going to be able to operate. That's a challenge in that immediacy. But for us, that kind of naturally led for over the course of the pandemic with that digital, the brick and mortar roots became like a little less so. The market expansion from us having launched businesses in 2 states prior to March of 2020, the next 2 years, we launched businesses in 46 states.
Wow.
And a lot of that was just from the natural inbound of businesses that were navigating and becoming edified to a product like this during the pandemic.
Yeah, it was actually almost a blessing because people had time to slow down and see what's out there.
There were some blessings. The other challenge that came with that was we had to make a decision around, are we an investment platform or a relief platform? And when we looked at the breadth of, having 10 to 100x increase in, monthly businesses coming in interested, for one, the sorting process there became incredibly challenging. But for two, there were businesses that you'd have a conversation with and they're like, we need $30,000 to keep the lights on for the next month. And it's like, well, the risk of, with that $30,000, you being able to make it out of this, like this might be able to help, but is this an investment opportunity? Right. And that was, I think, kind of one of the most challenging parts, in terms of our resourcing and making that decision, because, I guess adversely to what we were talking about earlier, like during the pandemic, the idea of donating to businesses that you love in your community to keep them alive, I think held the most validity and strength. But when you have something that's like an investment and you're kind of saying, like, not promissorily, but like, my plan here is to return you this amount of capital plus like your initial return for you supporting us. When there's that kind of uncertainty in a pandemic, we had to be, it slows things down. We
Yeah.
had to be super careful about, how we thought about it.
Well, I'm curious about this. I think it's something that gets a lot of people in trouble is they think that the starting point is a brick and mortar today. And I think that was true for the most part, but because of, I think Mainvest is a perfect example of the new tools and resources and ecosystems through which we have at our disposal to grow. You don't have to go for a brick and mortar today. You can try to get funding for, a ghost kitchen, which is still a very real business, right? That
Absolutely.
you need assets for, like a space you can go raise money to get started. And a start can be a ghost kitchen, right? So
For sure.
I don't know, like, why not? I mean, have you had people come to you for funding to start a ghost kitchen?
We have, and we tend to stray away from that.
Okay,
Candidly,
why is that?
Because I think in terms of the mission and like what we're doing, and like the types of businesses that we work with, there is this big community component, and a ghost kitchen kind of inherently is the opposite of that in many ways. Where, not to say it's not a viable business opportunity,
Right.
But it's not something that like people in the community are able to go to and serve and act as like a third space for like social engagement and participate in. And so that's for things that are like strictly digital and things like ghost kitchens that the people are going to be ordering through a bunch of like third-party apps, and they could change their brand and operate 5 or 6 little sub brands under it and just figure out what works. I think there's a lot of there's no fault in that kind of entrepreneurship, but it doesn't have the same impact in our minds of like driving that local economic growth and truly aligning the incentives.
I understand that. I still see
businesses.
ghost kitchens as a good stepping stone towards a brick and mortar. Like, what's stopping you from opening and doing takeout only or delivery only to get your food out there, and then show that you have proof of concept, and then use that traction to get.
Maybe I should caveat, because like when I think about a business that's doing operations through a commissary kitchen or like doing food truck operations, starting with the commissary kitchen, I view that differently than a ghost kitchen.
That's kind of, it gets a little wishy-washy with all the titles.
Like, I think the ghost kitchen, the cloud kitchen, ghost kitchen model, is mostly utilized for being able to try and test a bunch of different brands, have a distribution network, and it's a little different than someone that's like, I have this concept, like I'm going to start here. I guess that's what I think about the difference. But yeah, so for commissary kitchen, or for a business that's raising for like food truck or not strict brick and mortar yet, but prior to that phase, we will absolutely work with them. The specific ghost kitchen model of like, I want to retrofit this space, I'm going to like pop out a bunch of franchise ideas and see what picks up on the apps fastest.
So how many people have used Mainvest today?
We've had around like 700 businesses.
Was there a tipping point for you?
I mean, coming out of the pandemic was definitely obviously part of a tipping point. But for us, it's by category. I think we see that as we have enough, we hit like a critical mass of successes in a certain geographic region, like Massachusetts, or in a certain category, like breweries, bakeries.
Word starts to spread.
The word starts to spread, and the volume of use cases and like success cases we have when talking to businesses that are coming in, like we're just like, hey, like you can talk to one of these 50 people, and we're not going to say which one. You can pick one, and we'll introduce you to them because we know that they're going to have a positive like explanation of their experience with Mainvest. And I think that's one of the most powerful things we have in terms of our like success and I guess referral network is
word of mouth is still king.
Word of mouth is king, and the businesses that have raised on the platform are like NPS score, as it were, is like I think like 98%. It's higher than I've seen anywhere else.
Wait, explain that one more time.
Like when a business goes through the process, like we've talked to them after, like it works. And I think the biggest challenge for us is around that initial education still of how it works, and believe that it works, because once you go through that process and you have a bunch of people in the community that have voted with their wallets, you have that capital and you get to work, you open your doors, you see that tangentially of people that invested are like filling your like butts and seats on kind of day one, and like that kind of support. Like it's not just the capital, it's that long term, it acts as a form of customer loyalty.
Right.
And those tipping points that we see when we have, like, it really is by category, because we talk to a natural grocery store and they're like, well, I haven't seen a natural grocery store work. Like, I get that it works for this, I get that it works for that. So as we, continue to have these success cases, that's where the snowball really like comes into play.
So when you
for
said
us.
the percentage 98, was that how many people who come into your program to raise the capital? 98% of them get the funding they're looking for?
No, it's like it's around like 85%, I think, last 6 months,
Which is still pretty good.
It's very good.
Yeah.
We're very proud of that. And but it's a situation where, like, if you look at that other 15%, it's not like those are businesses that got like 80% of the way there. It's very binary.
So like either they sign up, they don't do the work.
Exactly.
Yeah.
And, we're trying to be very intent with that because, the way our compensation is structured is absolutely aligned with like our mission of, this kind of aligned interests. Like, we don't have any upfront fees for using the service. The only time that Mainvest takes our revenue is when a business has successfully closed their offering. So we're super designed to like work with these businesses to align incentives and make sure that like it's going to be a successful raise before we launch it, because it is a lot of work on both sides.
Yeah.
And we want to get it right.
And that's what I want to unpackage next. But we're going to take one more quick break to thank our sponsors and be right back to talk about the process from start to finish, what that looks like.
We have to interrupt today's video to let you know that right now Restaurant Systems Pro is offering a no strings attached 60-day trial that will help you improve your systems, increase your profit, and find better work-life balance. All you have to do is click the link below.
We're back. Now, I just want to know, pretend I'm a restaurant who is hearing about Mainvest for the first time in this podcast, or I'm a dreaming restaurateur, right? And I think I have the community I need to get the funding to approach Mainvest. What's the first step?
I mean, first step is when you hop onto the website,
You have an affiliate program, right?
We do have an affiliate program.
I'm going to be signing up for that.
Absolutely. The first step is like, if you've heard about us, is usually already there, where like you've heard about us from another business. 90% of like businesses that come in are organic referrals from, maybe not directly from a business, but they've seen another business in their community, seen it work for them. They come to us. You create like an application on the site. It takes around like a minute to do so. We approve or deny that application based on whether it's a fit. But if you're a small business restaurateur, like in kind of the category, that approval process is really designed around just the time saving of, we have a lot of businesses that come in and apply that simply like aren't a fit, like tech companies coming in like to like utilize these regulations. They look at our fees and they're like, well, these are like great fees. Yeah, because they're designed for like brick and mortar small business owners. Like, we don't want to charge upfront fees.
So number one, go to mainvest.com.
Right.
Number two, find the application to be approved into the program.
Yeah, and hopefully it's easy to find. Then it's really an initial conversation. Like, we'll sit down with you and learn about the challenges of your business, what you're trying to do, and work with you to kind of get everything set up. And what that means is, let's get your business plan and pitch and everything built out, so that when you do launch the campaign, you have like literally the online domain that people are going to see, so that people can properly evaluate the investment decision and whether they want to invest in it. So it's phase one is what we call like onboarding, which is basically just building out everything and working with us so that we can,
after you've approved them.
Yeah.
What are the green lights you're looking for approval?
So, a business plan is important. When we look at like a business's pro forma projections, for example, that's one of the things that kind of fields through whether or not, which is like their future, like what they expect to do in their next 2 years of revenue.
Got it.
When I use this as my most common example, when a natural grocery store comes in and, we're looking at it like, oh, like this branding looks great. These guys like seem very passionate. And then we look and they're projecting to make a 60% profit margin like in their 5 years of operations, and we're looking like the national average for a natural grocery store is around like 4.55%.
Yeah.
Like, that's like a standard deviation plus away from the mean.
Right.
It's like factorially different. Like, there's a flag there that like these people might not like necessarily understand like what they're trying to do.
So you're looking for due diligence in a business plan and a good brand.
And like when I say good brand, like I don't want that to be a deterrent, but like the idea of, it's a business that is business to consumer, most like we can talk specifically for restaurants, I guess here. Like for a restaurant, yeah, like a business plan, an actual plan for like what you're going to do. Why do you need the capital? I mean, I'd say that's the easiest way to think about it. You know, if you are looking to expand as an existing restaurant to a second location, you know, you don't have to necessarily have that location in mind, but have an understanding of like what you're looking for in that location.
Right.
If you're a new business that is, you know, like a new restaurant, like, do you know what city you want to be in? Do you have an understanding of like what your actual total startup costs are? Is the team in place? And none of those things are necessarily deal breakers because it's very dependent on like the scale and the businesses, like where the business is at in the process. And we talked to many businesses that aren't there and then 6 months later are there and then launch them. But it's really for us about, you know, holistically do all these pieces fit, and like, does the business have a plan? We can't launch, and we're not going to launch a security on the platform that doesn't have a plan.
Got it. So you decide they have a plan. It looks like a good plan. They've done their due diligence. You like the brand. You welcome them into the program. The onboarding process starts.
Absolutely.
Before we unpackage the onboarding process, what's the next process?
After the onboarding,
Yeah.
fundraising.
Okay, and is there a process after that?
Repayments and investor relations.
All right. I'm going to make sure we get it all out so I know not to waste time talking deep about one thing. So repayments and then investor relation. What did you say?
Yeah, like it's once you have the capital, the next step is you running your business. So that last process is basically like the next 5 to 7 years of your life cycle, and our relationship with you through that, which is designed to be as, you know, supportive as possible.
So the life cycle is, you know, signing up, getting approved, onboarding, fundraising, repayment, investor relations.
Yeah, and repayment and investor relations are kind of like all at the same time.
Got it. So let's talk about the onboarding process. What's this look like?
So like we're collecting, again, like your pro forma financials. We're working with you to build out the structuring of the terms. Like what are you going to actually offer people? And that's something that we definitely do help with in terms of like understanding the mechanisms of how, you know, investment security works. Like for, you know, Mainvest, we predominantly use something called the revenue sharing note that we built out bespokely for this, where you're paying back your community and your investors as a percentage of your gross revenue quarterly up until a total amount of principal plus return is hit. So basically you're setting a cap, like I'm going to pay back $150,000 off of $100,000 raised over the next 5 years. Every quarter I'm sharing a percentage of my revenue until it hits that $150,000 is an example of how it works.
Is that standard?
That's very standard. Yeah. And we built it out like that because we wanted to build a security that was actually designed to align incentives, where you're setting up your plan around, this is what I think I'm going to be able to do with your support. You know, every quarter there's a bunch of seasonality, there's challenges with businesses. If you generate a little bit less revenue in that quarter, you don't want to be stuck paying the same principal plus interest fixed payment from a term loan.
So these people aren't investing in equity. They're investing in profit share.
They're investing in a revenue
until they
share.
Get their ROI.
Until they get their ROI.
Got it.
And so the way to think about it, you know, over the course of the history of the platform, been averaging like a 12.5% like cash on cash return annualized, which we feel very proud of as a thesis proof of the concept, especially with portfolio of businesses, 85% food, bev, and hospitality, with 2 years of their life cycle, the pandemic.
Yeah. So you shared, it sounded like you shared the most common model in terms of the repayment model you coach people through, and as far as how to set that up. Is there anything that we missed?
For like the onboarding portion?
Well, yeah. What happens after you get the repayment plan modeled?
So we work with them to take, you know, their story, projections, business plan, and kind of put that into like a consumable format so that when they send it out to their community can actually understand it and see what they're investing in.
So you help them create the assets they need to promote the campaign.
Yeah.
And does that live anywhere? Do you help with pushing this out, or what's that look like?
So once we have everything ready, they review it all, we work with them, we file it with the SEC, and that actually unlocks their ability to go out and raise capital, and the campaign launches for their community. They have a link anyone they share it with can go to and evaluate the investment opportunity, understand the risks, the rewards, the potential returns, and make a decision to invest in that.
So the link goes back to Mainvest, where you're hosting basically
exactly. We're hosting all these pitches.
The information.
We're hosting their regulatory disclosures, their financial information, their plan basically, so that when they send it to their community can actually evaluate it and make an educated decision on whether they want to support it or not.
Can you go into detail about what helping them with creating the pitch looks like? How involved do you get in branding and packaging this pitch?
So we definitely don't get too involved in the actual creation of assets. It's more of we work with them to take their assets and put it into the format that makes sense. We work with them around like making sure that the story that they're saying makes sense and aligns with their actual plan.
So you coach them on the content to make that will help resonate with the investor.
Right. But like we're not building business plans.
But you're not out there with cameras.
No.
Got it. Okay. In terms of the onboarding, so you have the repayment plan model. You help coach through creating the assets, and you host all of the information. And
we
create the marketplace essentially.
We basically take everything for them to be hosted on the marketplace and to have that done in a regulatory compliant way, put that together for them, and file that with the SEC so that when someone is looking at it, they're able to evaluate the opportunity.
Got it.
Once it's filed, we launch that campaign for their community. So then they go out to their community. That's what I talked earlier. We work with them in terms of, the best, marketing content, like how to actually position it, commonly asked questions, how to think about like the different avenues of people that you can reach out to and
to get the word out.
So
this, I feel like we're starting to spill over into the actual fundraising aspect of things. Right. So the fundraising, you kind of provide a framework of best practices in coaching, it sounds like.
Correct.
Anything more than that?
So once the business hits that, like the social underwriting, that's when the things that Mainvest can do like unlock beyond just like the coaching and support. And so once a business hits that, we're a regulated entity. We're not recommending or suggesting any individual securities over any others. So we have an objective list of criteria per the regulations that we have for any business on the platform. As they achieve those milestones, it unlocks different things like a co-branded press release, like a direct email to the investor base.
So that is a little crowdsource-esque where there's like there's milestones and like almost like so when you're doing like GoFundMe, like you have to think about beyond the ROI, what are the other assets we can, like the recognition that we can offer, and we release. Is it like how do you structure that, like the actual like the tiers?
So they're really based around like percentage of capital towards goal, and there's a collection of different objective criteria that every business, as they hit those, it'll unlock our ability to roll that into our marketing. And we have to do that very intentionally. We can't give a business special treatment just because we like them. We can't push a security. Like we're an intermediary. We're heavily regulated, rightly so, by FINRA and the SEC. Our job here is to provide as much support as possible in an equal sense to businesses on the platform. And the way that we're able to feel comfortable, pushing out offerings to our growing investor base is objective and based on different milestones that those businesses are able to achieve.
Now, I know the money that people are asking for varies case by case, but typically how long from campaign launch to raising capital does the average campaign last?
Like 45 to 60 days.
Wow.
The average raise is around 140,000. There's definitely barbells. Like we launch a ton. It's like a barbell distribution, not a bell distribution.
Got it.
We launch a lot of businesses in like the 30 to 75 kind of range. 30 is our minimum, just because of, like I said, that kind of because our revenue is tied to the success of a campaign. We do take a lot of risk up front when we're launching a business, and so want to make sure that the economics do need to make sense for us as well, because we are a for-profit business. And then we've had businesses raise up to like 1.235, which is a specific regulatory number, million on the platform. The average that it kind of averages out to 140, and it also is kind of by type of business, right? Like for restaurants, I think it's around 100 is the average.
100 people ask for 100,000,
like are looking for 100,000.
Okay. So they're not looking to open with that, but they're looking to get over a hurdle with it or something.
Yeah, it's or they have they're putting a portion of their skin in the game.
They've raised a big portion. They're looking for a little bit much to get a little more.
I mean,
maybe even this is just a good way to draw attention to your brand too.
That is the big like other aspect that we haven't even talked about. If you think about the value of Mainvest to a business, I think why we have that 98% like NPS score of businesses being happy after going through this process, and 30% of businesses we've launched since the beginning have already come back for second or third launches and make this their like sole way that they're going to access capital in the future, is because it's not just working capital up front. It's not just community loan on the side. It's this combination of like awareness, buy-in, impact in a community that like cycles, and businesses that raise on Mainvest, our default rate is 4 times lower than SBA-backed lending during the same period of time during the pandemic. Our business closure rate is 1/10 the national average. Wow. These are businesses that go out and they're getting that community, like that support of the community. That was the core thesis. And I said the silver lining of the pandemic for us was it was a pressure test far and wide of that thesis. That coming out the other side and looking at these success cases, you can talk about Rachel, you can talk about the Fox Den. There's over 100 others in Massachusetts alone that we've worked with over the last couple of years that have allowed us to feel like, despite all these challenges, like this is working, this makes sense. And every single business we get to talk to and work with is kind of expanding on that and building on that network of successful entrepreneurs.
Got it. So, we talked about onboarding. We talked about the fundraising. Any other elements from fundraising before we wrap up with repayment and investor relations?
No, I mean, again, the average fundraising is 45 to 60 days. If you're raising 30 to 75, that's a 30-day raise. So it does kind of come into these cohorts. I don't want to be too prescriptive on it. But once you successfully raise, that goes into the repayments, and you're taking this support and capital from a bunch of people in your community, a bunch of potential main investors as well. Businesses are raising, they have maybe 100 to 500 people that have invested in this, depending on how much capital they're raising. We play a big role there. That doesn't work if, all right, okay, cool, now every 3 months I'm writing 150 checks and I have to distribute them.
That's a lot of work.
So we work with businesses around that repayments process.
So what's that look like? How do you work? What do you mean by you work with businesses?
So every quarter, once you've closed, business reports to us their gross revenue, and we pro rata distribute for them that percentage of revenue through the ACH rails into all the investors. So we handle repayments and the actual process for that for the businesses. The platform also acts as an investor relations platform, so they're able to have that all of the information, emails and everything of all the people that invested, and they can use them as an update channel and tell them this is what we're doing. We're excited to be expanding to this location, or we're going to be launching this Thursday night poke bowl thing. Just random examples. That base of investors, they have the ability to use them as a marketing channel, and the investors are incentivized to be sharing and evangelizing for the businesses.
Right.
They can also, and we totally encourage this. It's we're not gating that to the platform. I want to be clear. They have the ability to just roll those people into their, MailChimp or whatever marketing they utilize. But it's more of a lot of small businesses don't necessarily have that, fully built out drip marketing campaigns and that kind of stuff.
Exactly.
So it operates as kind of an entry point into that. And for businesses that didn't have, an initial customer list and customer base, gives them a great starting point.
So they're basically, as cash is coming in, they have their income account, gross revenue, money in, you're taking a cut of that gross revenue percentage to pay back the investors.
Exactly.
So do you get involved with fiscal responsibility, or as far as coaching and getting them to make sure that they're hey, if you put aside 5% of your total gross to pay back your investors, are you putting that in a separate checking account to make sure you have the money to pay back your investors?
That feeds way back into that first part of the process when I talked about the, working through the pricing of the security with the businesses.
Yeah.
In that process, we're going through that model and be hey, this is what this is going to look like. Based on your projections, if this is going to be your revenue, this is your net profit, you need to be pricing this to make sure that you're able to service the debt, or else it's not going to make sense.
Right.
And we are only launching businesses that the economics of that makes sense.
So typically, say I'm aiming for 15% profit. I have a really profitable model and I want to do 15% profit. Well, let's just make it 10% for easy math. Of that 10% profit that I'm planning on making, what percentage of that do you recommend people put aside for?
It really depends on what their gross revenue share is. We kind of know that ahead of time, right? So because it's tied to gross revenue, it's going to usually be a much smaller percentage. Businesses are anywhere from 0.5 to maybe 4.5% of gross revenue over a period of time. And it varies based on the actual economic and operating model of the business and the category. Cannabis, for example, is an incredibly heavy cash flow focused business with much higher margins. When we're launching a cannabis business and they're looking at their margins, they have a lot more to play with in terms of that debt servicing based on it. Also, cannabis is inherently, a newer, riskier industry. If we look at, the priced returns for these cannabis businesses that launch on the platform, those are definitely in the highest end of, risk reward in terms of how they price them. For a restaurant that's a new operator that's launching their first location and, maybe they had worked like back of house at a restaurant for a while. They have some restaurant experience, but this is their first time launching a restaurant. Like
Huge risk.
It's a huge risk. And we want businesses, and we work with businesses to be pricing risk appropriate. Whereas if you have like a Rachel Miller that launched Nightshade Noodle Bar and crush it, and like is going out her second raise when she raised for Sin City Superette, the way she priced her cost of capital was lower, and rightly so, because of how de-risked it was in the current environment. And her, like, she has, the skin in the game, the backing, and the experience and output to prove it.
Right. Okay, so with the time we have left, we only got a couple more minutes left. Did you want to touch on investor relations a little bit? I mean, I think we kind of talked about that a little bit with how, but wrap that.
I mean, just wrap really quickly. Like, part of the value of Mainvest and why it leads to, I think the counter to the stigma of like 90% of restaurants fail in their first year of operations, very inherently so, is it's not just capital, it's not just loyalty, it's also like that engagement with the community, that front end marketing and investor relations. These investors, because they're aligned in incentive for this business to succeed, and like every dollar of revenue you generate incrementally over your initial projections are, it's not like they're getting paid back more, but they get their return faster. It's a better investment the better you do.
Yeah.
They're incentivized for you to succeed. And so having that base and being able to utilize them as a broadcast channel, you want to be updating them around everything going on.
Got it.
Not just the good, also the bad. Like, these are some challenges we're facing. And we've had businesses that, we see it naturally happen. Like, we have there's a cookie place that was able to secure a, procurement deal with a local college because one of the investors was like, oh, this is amazing, like I want to connect you, and like actually act as like building blocks and as like business development because of that aligned incentive.
Yeah, man. I could honestly continue talking to you, but I want to respect your time. I know you got a meeting on the heels of this, so before we say goodbye, we like to wrap up by calling somebody out. So as an industry, as Mainvest is well tapped into the world of restaurants, who do you think I should get on the show? Who do you respect and admire? Somebody who's just doing an amazing job, who's really turning the industry upside down, and who has a story to share.
This is so tough for me because you're gonna make me play. Like, it's tough because I can't play favorites. I mean, again, we've worked with 600, 700, like I think 700 plus like launch businesses. We got this amazing group of businesses within the subset of restaurants. I've got to put me on the spot. I could say like one for each state.
Go with your gut, man.
I got to go with my gut. I think I would say like Rachel's such a great example. She's recent.
I already had her on the show.
But so there's a brewery that also like runs a restaurant out of the brewery. I feel like that's a fair enough overlap.
Yeah.
In Albuquerque, New Mexico, called Nexus Brewery, and Ken, the owner of that, spent the majority of his life running a local community bank, and left that local community bank to start Nexus Brewing. I think the Nexus ties to a huge fan of Star Trek, so it's a Star Trek themed brewery. And he is the definition of community-focused entrepreneur with an immense amount of vocational skill, technical skill, and passion around the community and supporting that. Just watching them from when they raised, I think, pretty early on into the pandemic, but during the pandemic, raised around $150,000 for the expansion of the brewery to where he's at right now, and like just the continued success, and seeing like random press articles about like what he's doing in the community, the impact he provides, just is a full like 360 overlap with what we believe in and what we're doing.
That's Ken, Nexus Brewing, and that's in Alabama?
Albuquerque, New Mexico.
Albuquerque, New Mexico. Look out. I'm coming after you. I'd love to get you on the show. And this is where we let the listeners know what's the best way to connect. Do you have a best way to connect?
Oh, sorry. I thought that was the wrap up.
No.
The best way to connect, you can obviously shoot an email over to support@mainvest.com if you want to connect directly with someone on the team via email, or just head over to Mainvest, create a free account, and let us know how we can help.
And this is episode 1016. So you can head over to restaurantstoppable.com/1016. I'll have a summary of today's discussion as well as any links to get over there, and look for an affiliate link, because I'm going to do my best between now and when this goes live.
We'll get you set up.
All right, cool. That's it. Now is where I say, Nick, there is no questioning, my man. You are unstoppable, and thank you for the positive work you're doing in the industry.
Thank you so much for coming down.
Pleasure's mine. Cheers.